All right, let's dive right into Apple's latest earnings report for Q4 2025. And the headline here is pretty simple. They beat expectations, they promised a huge holiday season, and well, the market absolutely loved it.
So, what did the market think? Well, here's your answer. This was the immediate verdict, right after the report dropped. In after-hours trading, the stock jumped a full 4%. This wasn't some kind of mixed reaction. Investors heard exactly what they wanted to hear, and they voted with their wallets.
And this, right here, is the core of this story. It's not just that Apple had a strong quarter. I mean, that's great. But they also did something they rarely do. They gave a really direct, very confident forecast for the holiday season. That's the 1-2 punch that really got the stock moving.
Okay, so let's get into the nitty-gritty. Let's look at the hard data and see exactly how Apple stacked up against what Wall Street was expecting for the quarter that just wrapped up.
As you can see, it was a clean beat on both the top and bottom lines. Revenue came in at $102.5 billion, clearing expectations by about $300 million. And maybe even more impressively, earnings per share hit $1.85. That's a really solid beat, and it just shows you how profitable they were. A very, very strong way to close out their fiscal year.
And to put that into perspective, it wasn't a total, earth-shattering blowout, but it was decisive. A solid beat on both of the metrics that matter most, and that really set a positive tone before management even got on the call to talk about what's next.
So, you're probably wondering, where did all this strength come from? Well, no surprise here. It was powered by the two engines that just keep on running for Apple, the iPhone and that incredibly profitable services division.
I mean, just look at these numbers. This is where you can really see the health of the business. iPhone revenue, up a solid 6% from last year. But the real story is services, up a massive 15% to an all-time high. This is that famous Apple flywheel effect in action. More iPhones out there means more people paying for services. It's a beautiful thing.
And you could just feel the confidence coming from management. Tim Cook summed it up perfectly. Now, the crucial thing to remember here, these amazing results, they only included one single week of sales from the new iPhone 17. That's a huge signal that demand for the new phones is off to a really, really strong start.
Okay, so during the Q&A call with analysts, a few topics kept popping up. First, China. Revenue was down a little bit there, but management was quick to say they expect it to start growing again next quarter. Second, supply. Apparently, they can't make the new iPhones fast enough, which, is actually a pretty good problem to have. It means demand is huge. They also confirmed that their R&D spending is ramping up because they're pouring money into AI. And finally, those margins, incredibly strong, thanks to selling a lot of high-end iPhones and high-profit services.
But as strong as the past quarter was, that's not the real story here. The real headline, the thing that got everyone talking, was the guidance for what's coming next.
This right here is the number that basically poured gasoline on the fire in after-hours trading. Management said they expect total company revenue to grow between 10 and 12% next quarter compared to last year. For a company the size of Apple, that is an enormous number and a massive vote of confidence.
So what's that actually mean in plain English? It means they're expecting an absolute monster of a holiday quarter, a record breaker. It's all going to be built on double-digit iPhone growth and that super strong services business. Now, it's not all smooth sailing. They did point out some potential headwinds from tariffs and, of course, that higher spending on AI. But the main takeaway is that the sales momentum should just blow right past those costs. So you take the solid beat, you add in that incredible guidance. What's our call on the stock? From an analyst perspective, we're rating it outperform. And here's exactly why.
For us, the bull case is pretty straightforward, and it stands on four strong pillars. First, the iPhone 17 cycle clearly has a ton of momentum. Second, the services business isn't just growing, it's accelerating, which is a huge tailwind for profits. Third, that amazing guidance for the holidays, it just removes a whole lot of uncertainty. And finally, that extra spending on AI, that's not just a cost, it's an investment in what's probably going to be the next big thing for them.
Okay, so from an analyst perspective, that's our view. But if you're an investor, the question becomes, how do you actually play this? Given the strong report and outlook, what's a potential move here?
Let's walk through one potential strategy.
So one idea here, and it's a classic one, is using options, specifically buying January call options. Now, what that really is a bet that the stock is going to rise between now and January. This strategy lets you play that positive momentum we're expecting through the holidays. And it also positions you for a potential run-up as the market starts buzzing about Apple possibly becoming the first $4 trillion company.
It's a way to capture that potential upside with a clearly defined risk.
And I have to be absolutely 100% clear on this. This is not financial advice. It's for informational and educational purposes only. You should always do your own research and consult with a professional before making any investment decisions.